All right, so I'm going to go ahead and introduce myself and then give some housekeeping, and then I'll introduce our presenter for today. So my name is Brooke. Welcome to our second presentation of this Making Sense of Sense series. I am a program coordinator here at Alzheimer's Services, and this is our second presentation as a part of this series. Our final presentation will be next Tuesday at our office on North Boulevard, and it will be in person at 10 a.m. So if you have any questions about that, you can write to me in the chat. That will be a presentation and program all about creating your own caregiver binder full of essential paperwork. You don't need to bring a binder. I have everything provided for you that you will get to take home with you. So I hope that you join us for that next Tuesday. By attending all 3 sessions of the Making Sense of Sense series, you will receive a free consultation with a select group of elder law attorneys. So I will also give everybody that information following the next presentation as well. Along with these Making Sense of Sense presentations, we have many events going on in November. November is Alzheimer's Awareness Month. So some other events that I wanted to highlight are our Fall Fest. That is coming up next Wednesday from 11 to 1. If you haven't registered for that already, we hope that you join us there. That is a perfect social opportunity for anybody who is a current caregiver and their loved one to come and just enjoy some fun time with us. And then also we have memory screenings going on all throughout our service area throughout the rest of the month. Lastly, I wanted to mention that registration is now open for our 2025 education conference. It's going to focus all about dementia risk reduction and healthy habits for caregivers. So I hope that y'all are able to register and join us for that as well. We have lots of exciting things coming up. For our presentation today, just like our normal protocol, all calls are going to remain muted throughout the presentation. If you have any questions, you can put them in the chat box. We will be recording this presentation and putting it on our YouTube channel. And I'm going to introduce our presenter today. Some of y'all might recognize him because he is a Baton Rouge native, Stephen Brooksher. He is a graduate of Catholic High School, Tulane, and LSU. He has a history and passion for helping others and has intertwined this with his day job as an insurance agent. His office's mission is to provide exceptional insurance service to meet the unique needs of their customers. And he and his office are consistently recognized by State Farm as one of the top performing teams nationwide. And he is committed to delivering personalized service with expert advice to ensure you and your loved ones are well protected. Insurance is not always one of the most fun things to talk about, but if y'all are familiar with the American cartoonist Ken Hubbard, he once said that fun is like life insurance. The older you get, the more it costs. So in today's world, we are thinking a lot about the cost of things and how we can position ourselves to be best prepared for the future. So I hope that we're able to dive into a lot of that today, and I'm glad we have a local expert to share that with us today. So Stephen, I'm going to go ahead and pass things off to you.
Sure. And Brooke, I do have some information that I can share if that would be helpful.
You can share your screen if you'd like.
Okay. Let's see. Where do I find that share button?
It should be right at the bottom of your screen. It says share.
Let's see, more. Maybe docs, share docs.
It should, you can press share and then it should give you like a few different screens that you can choose from.
Let's see. It doesn't have that option at the bottom of the screen. Let me see. It's okay if I can't get it. Oh, here we go. I see it. Well, and I don't want to tie everybody up if it's not giving me that option. But it doesn't show me anywhere on the Zoom workplace to do a share, Brooke.
Okay.
I'm looking to
You're
see.
also welcome to email it to me and I can share it on my side if you want.
So that's what I'll do. Thank you everybody for attending. And look, anything I can do to help, I'm here to help. I know that you're probably at this stage in your own journey where you're thinking about preparing for your future and long-term care insurance and making sure that you are protected and that your needs are being met is really important. And kudos to you for thinking ahead to make sure that that's a priority for you. The place where I go for resources, what I think is really cool and really helpful, the federal government actually provides some great resources for long-term care insurance. And I'm going to go ahead and tell you all that website because like with State Farm, like I can give you, if I'm giving you general information on long-term care, that's where I'm going to pull it from, which is, it's called longtermcare.gov. Okay. And on that website, it actually is a huge resource, and the federal government is incentivized to do that because they want to make sure that you have prepared, because if you have not, then eventually Medicaid is going to pick up on you, and that's the federal government's pocketbook and the taxpayer. So they want to, it incentivizes everybody to make sure we're prepared, because you don't want to necessarily end up on Medicaid because you don't have as many choices, and your loved ones are gonna, that means they're gonna take all the resources that you've saved up from your loved ones in order to get to Medicaid. And then the government doesn't really want to do that either, because then it impacts, if they're having to spend taxpayer money on Medicaid for long-term care for you, then they're not able to spend that in other ways. So the government wants to make sure that you have plenty of information and that you're prepared. And I think that's a wonderful thing. So, the first thing that I would say, and look, I guess, Brooke, is it easier if I just let them ask questions, or do you want me to kind of do the presentation and then they can do questions at the end?
Yeah, I think maybe impart as much of your knowledge as you can in this short time, and maybe answer some frequently asked questions or things that you want everybody to know about long-term care, the
Yeah.
long-term care definitions,
Okay.
all that good stuff.
So
And
long-term
we'll have
care.
plenty of time for questions afterwards as well.
Sure. Okay. And so long-term care really is basically the need that many people have. And I think the most recent statistics is about 40% of people end up needing some sort of long-term care towards the end of life, where it's not Medicare, because it's not going to the doctor for treatment or a surgery or being in the hospital. It's not Medicaid, because that's really focused on your indigent population, right? It's for to help people that can't function in a day-to-day environment by themselves, kind of towards the end of life, to get assistance and care. And a lot of times it has to do with your activities of daily living. Say it's somebody that can't eat by themselves or needs help going to the restroom or getting dressed, things like that. If somebody's having trouble with those things, then long-term care coverage is something that's really important that you want to have. And you might be thinking of nursing homes or somebody coming into your house to help you, and I'll talk about that a little bit. But just to give you an idea, in more recent terms, like what is the cost of long-term care and why is it important for you to thinking about it? As of just a few years ago, the cost per day for a nursing home for a private or semi-private room was $225 a day. And it can be even more for a private room. So that's over $6,800 a month that it costs to be in a nursing home. And, for a private room, it's $7,700 a month, at over $250 a day. And then sometimes you might be like, somebody might have to go to an assisted living facility. And assisted living facility is not as much as skilled care at a nursing home, but then you need some help, right? You're not independent living, but you're getting some help. That's going to average about nationally $3,600 a month. Say you say, well, my spouse or myself, maybe you have a loved one that needs some care and you can't provide it all day, every day. You need a break every once in a while, and you need somebody to come help you at the house. The average rate for that is over $20 an hour. So you're paying $20 an hour to have somebody come to the house to help. Maybe not do much, but just sit there in case you need it, or to help the loved one get into the bathtub, or to make sure they're getting dressed, or you just be there for them. And it's going to be that same price for, having somebody come help you at the house. Say, you're able to help with your spouse, but that person helps keep the house clean and tidy and helps with the meal. So that's going to be $20 to $25 an hour that you're paying for that kind of care. And then there's also another facility called adult daycare health centers. And those adult daycare health centers are about, $60 to $100 a day. So if you're thinking of pricing, all that stuff can really add up, and that's why it's so important to prepare ahead for long-term care. A lot of the questions that you might ask is, well, who pays for that? Well, Medicare only pays to an extent of hospital care or skilled nursing. And once that skilled nursing or that rehab program is done, then you have to figure out how to pay for that extra care yourself, okay? Medicaid is going to pay, the government will pay Medicaid when there's no other resources available. And so people run into this a lot because they say, well, when will the government help me with assisted living or a nursing home? The government will help you once all of your other resources are drained. And not to get too much into the details, I don't have that in front of me right now, but I think they go back, they'll go back 5 to 7 years prior to when you qualify for long-term care needs, to see if you gave any of your money or resources to children or other loved ones, and they'll pull that money back. Like, they want to make sure that they're taking all the resources that you have in your power, right, and using that before Medicaid comes in. But once all those resources are depleted, they only leave a little bit for the surviving spouse, so they'll take all the surviving spouse's resources for the most part. And once all that's depleted, then that person that needs long-term care will qualify for long-term care benefits through Medicaid. 5 years, Stephanie's saying 5. Again, Medicaid is a great thing to have, but if you can provide or have your own coverage, it kind of protects you from in the ability of the fact that you have a little bit more choice, or your family has a little bit more choice as to how they're going to use the resources and what kind of care you're going to get. Okay. Let's see. Does anyone have any questions up to this point? Just kind of given the costs and the basics of long-term care and what qualifies? I'm covering a lot of information. Y'all can just put it in the chat or talk to Brooke if you do have questions. So there's several different options for long-term care insurance that have existed in the past. And I can talk to you all a little bit about what is being offered in the marketplace now, and in what has happened. So years and years ago, and up until probably about 5 or 10 years ago, the most common form of long-term care insurance was basically like health insurance. You kind of paid and paid and paid, and it was maybe a lower fee, and you were paying a monthly fee that the insurance company was basing it on all of the people that are your age and saying, well, what percentage of these people do we feel like are going to need long-term care, and how long are these people going to live? And 30 or 40 years ago, more people didn't use long-term care because they weren't living as long, right? And our medical system had not evolved to where it is, whereas like nowadays, a lot of people that might be sick are able to extend their life, or might have a heart issue or have some form of a health issue, but because of our medicine today, they can live 30 years, they can live 20 years. And they might live 5 or 10 more years with assisted living or nursing home care, whereas years ago, that lifespan would have been shorter. And so what ended up happening was all these insurance companies started to go bankrupt because people were living longer and utilizing the insurance they were paying for, which was to care for them in their old age when they needed some assistance. So that's when you would have noticed, if you had a loved one that had long-term care insurance, that almost every year for a long time, it seemed like, oh, look, Stephanie's updated the cost for living to the most recent numbers. You can also do it state specific. So I could have run that. I was just giving general. So she's saying now it's almost $9,000 a month for assisted living, and $8,000 a month for nursing homes on average. And that's probably the local market. So I was given national numbers. You can go into the longtermcare.gov tool and look at specific state numbers as well, which are cool. But to talk about what's happening, like, because the insurance companies were paying out a lot more on long-term care than they were taking in, they started having all these big rate increases. And a lot of people's rates would go up like 30% every year, 15%. And it became a hardship for a lot of elderly people that were paying and paying. They've been paying for years, but those rates just kept going up. And really over time, a lot of those long-term care insurers either left the industry or ran out of funds. And so they stopped offering the product. And so now, because so many people use long-term care and people are living longer on assisted living or in nursing homes. There's very few insurers now that still offer that kind of traditional policy where they say, hey, you pay all this money in over 20 or 30 years, and if you need it, we're going to pay out the coverages for. Now what you're seeing is some companies are offering long-term care insurance, and it's very good and valuable to get, but there's limits to it. So you'll see like a lot of companies are saying, well, we'll give you up to 3 years of coverage, or we'll give you up to 4 years of coverage based on how much you pay, or they'll give you a daily limit, or they'll say, we will pay coverage, but only if you have receipts for it and only specific things, right? Specific things that you can that would be coverable items. What I would recommend is to always think ahead. Like the younger you are, the cheaper the policy is going to be, and the more affordable it'll be, because it'll offer you the best bang for your buck. State Farm has a policy, and the policy State Farm offers is similar, and other carriers do as well, which is called it's basically a form of life insurance that has what's called an accelerated death benefit. So you buy a life policy that is a permanent life policy, and if you need long-term care and you qualify for it, you can use that life policy while you are still alive. Okay, so say you had a $300,000 universal life policy that's permanent, it lasts your whole life, but you qualify for long-term care, and you need long-term care coverage, right? You can pull up to 2% of that death benefit. So I could calculate for 300,000 up to 200% of that death benefit. And you would choose your death benefit, right? That would be 6,000. So you could pull up to $6,000 a month out of a policy like that until you've used all of it, or until you were to pass away or no longer need it. And so that's what a lot of companies are offering now, which is like a permanent policy that's guaranteed and always there, that functions as life insurance. But if you need it while you're alive, you can pull those resources so that you can have that coverage. So those are kind of, that's generally one of the options that is still being offered. There are a few companies that may be offering traditional long-term care insurance, but I would always make sure you check vital signs or the financial background of companies, because for a long-term care insurance product, you want to make sure, because the costs are going up, that whatever insurance company is offering it is one that is solvent and has financial stability, so that they do, because anytime you're paying for insurance, you want to make sure you're with a carrier that you know is going to be able to deliver on the promise. And you want them to be able to pay out on that claim. You don't want to get in a situation where they say, well, we didn't have enough money, other people used it, other people used the money you've been paying in, kind of like they're saying with Social Security now, where it's like they're like not sure they're going to have enough to fund it in 30 or 40 years or whatever. Same thing with insurance. Like you want to make sure whatever company you're with is one that you believe and you're confident will pay out and deliver on what you've been paying into all these years. Okay. Let's see. I got a few questions and I'll answer those. Should families cash out whole life for elder care if the funeral cost has been paid? Stephanie, that's an option. You could always cash out, you could always take the cash out of a cash value whole life policy. That's a great option to help cover it. I wouldn't do it unless you needed to. I would say that's a great benefit to have. Generally, if you have cash value in a whole life policy, Stephanie, you might have a $250,000 policy, and you might have $50,000 or $100,000 in cash value. Obviously, that $250,000 is much more valuable to you as a death benefit than the $50,000 or $100,000 in cash value. And it'd have to be I'd have to get in the specifics of each policy. But if you need the money, that's a good use. The other hand is, the federal government's not going to pull cash value out of a life policy. Life policies are protected, and so they can't use that to pull it before Medicaid. So that is protected. You wouldn't be forced to do that. You could hold that if you wanted to and protect that, and your loved one would still qualify for Medicaid. What are some examples of qualifications? That's a great question. Brooke asked about, like, how do you qualify for these long-term care policies? You're going to want to go ahead and underwrite those policies when you are healthy, and when you have the time and the resources to kind of think ahead. Excuse me, normally policies of this type have an age limit to apply for them. So like with State Farm, it's till 75. You might find some carriers that'll go longer than 75, but the longer you wait to do it, the more expensive it will be, obviously, because it's not necessarily if it will pay out, it's just when it pays out for these permanent policies. Examples of qualifications, you don't have to be in perfect health, but no major issues, right? You're generally, I'm not an underwriter, but I can tell you generally somebody that has maybe some has had like some serious heart issues, maybe someone's had a heart attack, or somebody is a diabetic, like a type 1 diabetic, or has some health issues. Generally, those are things that'll make it tougher for underwriting to cover any kind of long-term care for that. Okay, Brooks asking, would pulling that money out be tax-free or tax? Is that for like whole life you're talking about? If you pulled cash value whole life? Oh, so long-term care. If you have a long-term care policy, right, and you're receiving the death benefit, that should not be taxed, just as death benefit for life insurance should not be taxed, because the federal government does should prefer the fact that we're using this and they're not having to dip into their resources. Can I explain the difference between term and whole life policies? Okay, so a term policy is generally not going to have a long-term care benefit rider because it's not a permanent policy. A term policy is cheaper, and the reason it's cheaper is because the insurance company is giving you a discounted rate because it's only going to be covered for a certain time period when you're not as likely to pass away, right? The younger you are, the less the likelihood that you're going to pass away. And so those term policies are great options for people generally when they're younger and they have kids, or they're trying to protect like income before they retire, right? And they need to take care of like expenses and debt, or take care of a surviving spouse and children, things like that. Your permanent policies last your whole life, regardless of what happens to you. They're guaranteed. Your whole life policies are. And those kind of policies are policies that are going to have any amount of money that you put into them is going to stay in the policy. And so you have that money sitting in a cash account within the policy that you can have access to if you need to. That's the difference between the policies. What are qualifications to start pulling death benefit? Okay, great. So for long-term care insurance, every company and every policy is a little different, but generally to qualify for that accelerated death benefit rider, your long-term care, you're going to have to, with State Farm, not be able to meet 2 activities of daily living. And those are the things I mentioned before. So you're going to need to be going to a doctor, and a doctor's going to say, yeah, Frank can't dress himself. He needs help dressing, and he's needing help eating or going to the bathroom. There's several things called activities of daily living. And if there's certain things you can't do by yourself and you need help with, then you can start qualifying for these long-term care benefits. Another benefit of most of these policies, and State Farm included, is that State Farm's going to give you this up to 2% of the death benefit of the policy, regardless of whether you have receipts for it or not. So say you're just going to get a check, okay? And you can say, well, I don't want all of it. I just want to pull this amount. So say you have a $6,000 max benefit you can pull out of the policy until you use the $300,000. You could say, well, I only need 300 right now, so start giving me 300. So 3,000. You can get 3,000 taken out, and then if you need more, you tell them you need more, and they give you more. But the max that you can pull out is the max, but you can take less. And then secondly, you don't need to have any proof of anything other than the fact that your doctor's saying that you're not able to qualify for 2 activities of daily living. So State Farm's not coming back and saying, well, you used it to pay the guy that cuts your grass, and you used it to buy groceries instead of long-term care. They're just going to give you what you're requesting as you qualify. Another question is a whole life policy like a 401k where it grows interest? So a life insurance is different than an investment, but a life insurance policy, a whole life or universal life policy, does grow within depending on the type of policy, it does grow over time and does accumulate cash value, just like something that you were putting into a retirement account would. It's going to tend to grow much more conservatively because it's a different purpose. It's meant for, there are some financial benefits to having permanent insurance, but the main purpose of permanent insurance is to protect your life, and if you were to add something like this, to have long-term care coverage. What other questions do y'all have? Are there any tax breaks to having life insurance? So that's a great question. So or long-term care insurance. The protections for long-term care, first off, your cash value policies, which this long-term care effective policy would fall under, do have protections. They can't, in Louisiana, we have a lot of lawsuits, right, that causes insurance prices to go up for auto and homeowners. Those cash value life insurance products are protected from lawsuit, and they can't be depleted by the federal government saying, hey, I see you have this cash value, you need to use this before you qualify for Medicaid for long-term care. So they are protected. Then the tax breaks for having it are that, if somebody passes away and they have a life insurance policy, regardless of whether it's whole life or term, those benefits are completely tax-free to the beneficiary. So somebody has a $300,000 life policy or a long-term care policy that they don't use that converts to life, right? They're gonna, the loved ones that are the beneficiaries are gonna get that money tax-free, and they don't have to report it on their tax income returns. So that's really good. They may have only paid $100,000 or $150,000 into the policy over the life of the policy, but that death benefit is tax-free. So all that growth is tax-free once that comes out. Stephanie asked, whole life is not considered assets, but term is. So your whole life is going to be considered an asset because it's going to have cash value in it. Term is not going to collect any cash value. It's a discounted rate that you pay because it's only in force for a certain period of time that rate's locked in for. Are you able to open a life insurance policy on a loved one who you have power of attorney? I guess theoretically you could open a life insurance policy on somebody you have a POA for, but you would have to get that through underwriting. And generally, if somebody has power of attorney over another person, then there would probably be some questions over the capacity of the person that they have power of attorney over. So it might be a little harder to underwrite. Now, I can tell you, there are some carriers that offer not long-term care policies, but a guaranteed issue final expense policy, which covers funeral expenses, and that does not require any underwriting, and anyone can write it out. If you have insurable interest, you can get a policy on a loved one, even if you have POA. So that's a great policy that you might consider to cover just death expenses and the funeral expenses. It's called a guarantee issue final expense. Some companies do offer that, and you don't need any underwriting. Your long-term care policies are generally probably not gonna be issued for most people that I would imagine might need to have a power of attorney, because you do have to have a cognitive screen for long-term care insurance, and that cognitive screen is generally probably gonna weed out most people that might need a power of attorney, or if they're very ill, it's going to get weeded out that way. I'll say, is there a sweet spot or recommended age to acquire life insurance, like long-term care or with an accelerated death benefit? I think all people at all ages need life insurance for different reasons, but if you're looking for that accelerated death benefit rider that would cover long-term care needs, I would say a great time to get it is in your 50s. The sooner the better. I just had somebody, for example, that I wrote one on a few weeks ago, and her parents had just passed away, and her dad did not have long-term care coverage, and so she and her siblings had to drive and go take care of him in his last few years, and she would take off 1 or 2 days a week to go take care of him. He was in another city. She had to drive about an hour, and then so she was thinking about it, and she ended up doing a one-time fund to fund the long-term care policy. There's some creative ways you can fund them, and she just paid like a one-time fee of trying to remember what her situation was. She did like a $300,000 policy and might have, or a $550,000 policy of coverage, and she just funded it with, she had received some income from the death of a loved one or the selling of something, and she put $200,000 towards it one time, and then she automatically had that $550,000 of death benefit and coverage for whenever she needs it. It was a great way to do that. So Ellen is asking, if we wanted to find out more about how to qualify for this life insurance, what steps should we take? I would say schedule a time to meet with your insurance agent. You know, you can meet with me, or you could meet with, you know, if you have an insurance agent that you work with already, just to kind of talk with them about it. And they can tell you about what products they can offer you and what might be available. I can speak to our products, and I know that we provide great products, but there are other companies that do provide good products as well, obviously out there. Is long-term care insurance, Rachel's asking, oh wait, sorry. Brooke's asking if we wanted to find out more, who is the professional to speak to about long-term care costs? CPA, CFP, insurance agent, elder law attorney. So the answer is all those people can give you an idea. But if you're looking at kind of identifying what specific costs they might need to prepare for, I would say the easiest and quickest place and the cheapest place to go would be to go to the government's website, longtermcare.gov, because they break it down. Like they have a state by state cost of care and what you might need and what qualifies. And all this stuff I'm presenting, you can find a lot of it on that website in detail. And so I think for anyone that wants to learn more about it, it's a great way to do that. They're not going to talk about details of specific policies because they don't offer necessarily the policies, but the government wants to make sure you're educated on that. And I can appreciate that they have that. In terms of long-term care, getting long-term care insurance, you would obviously work with an insurance agent for that. I know the person, several people get referred to me from an estate planning attorney. Like estate planning attorneys really recommend them usually because, you know, it's something to protect the estate of the individual and make sure that, you know, the end of life process is fully kind of tied up. Your CPA can talk about tax benefits, and an elder law attorney is a great person to consult about it. And I might say like that might be like an estate planning attorney, right? Somebody that's helping you plan for, you know, the future of your family and what are you going to do to have things all tied up if and when you pass away. So those are great people to talk to as well. Rachel's asking, is long-term care insurance now being offered in any other formats than the two you have mentioned? Obviously, there are other ways you can fund long-term care insurance, and you don't have to buy a policy. You could do it, and I'll give you some other ideas. You could save the money up yourself and pay it out of, you know, your savings. Now, I would make sure to make sure that your stuff is protected, right? Stuff that just sits in a bank account is not always protected from lawsuit or you know, any kind of frivolous issue, right? So you just want to make sure if you're doing cash or cash equivalents, you're protecting it properly. But you know, you could pay for it out of pocket. You can get a lot of people in the government has a list of things they recommend too that you could try to pursue. But like you could do an annuity, where annuity is basically you take money and just like you would do for these long-term care type policies, and you put the money into an account and it grows at a conservative rate. And then you sit it for a certain amount of time, like 7 or 10 years, could be 3 or 5 years. And then they over the next 20 years, you get like a monthly benefit from that annuity. Okay. And then you can use that to pay for long-term care. You could get with an estate planning attorney to develop a trust to try to help pay for it. And some people will do reverse mortgages on their home. Now, I'm not recommending any of these things over another thing. But those are all options that people have used to try to cover when they need it. I think, you know, that's why my recommendation would be to, if you can prepare now and get a long-term care policy, like the kind of policy that we were talking about. It's great to have that so that you just have that all taken care of if and when you need it. Is there a cost for an, oh, that's great. Is there a cost for an insurance consultation, Brooke? No, there shouldn't be. I mean, meeting with me is free, and I would imagine that for most professionals, it would be, like that's something that, just to talk with somebody about it and explore your options and to look at what is being offered is a free resource and something that generally people would be happy to do. If you're going to talk to an attorney and get advice from an attorney or a CPA, generally that's going to be billable hours. But for meeting with an insurance professional is generally not going to be something billable. Is this type of policy ever offered through employers? I think some employers do offer, they offer disability. There might be some employers that offer long-term care. I feel like I've seen it. The one thing you want to be careful of is generally group benefits from employers are offered while you're employed with that employer. And generally, somebody that is going to need long-term care is probably no longer going to be employed where they are. And so you would just want to make sure if you started putting money into a group benefit policy with your employer, that long-term care would continue after you retired or after you left that place of employment. Brooke, could you use your policy benefit to pay for care for your spouse or dependent? So if the way that you can start pulling, so this policy, this long-term care policy with an accelerated death benefit rider, which is called in State Farm terms, flexible care benefit rider, you qualify to pull forward if you can't personally do 2 activities of daily living signed off by your doctor. And that is a way to pull the money out without any kind of strings attached, let's say. But if you have, cash value in your policy, it's your cash. So you can pull it for other purposes at any point, right? There's just some extra things you would need to do where it's like you could take it out as a loan and then you pay the loan back, or you can cancel the policy, take all the cash value out, but it's not going to be as much as the death benefit. It might be like $150,000 cash value, whereas the death benefit's $300,000. But if you got into a situation where you needed to use that money, it's your money and you can use it for sure. Is there a negative effect for taking money out of the policy early? Okay, so if it's used for its intended purpose, like if you're using it for long-term care and you have that rider on your policy, then the only negative is that the death benefit decreases. So if you start with $300,000 and you use $150,000 for long-term care, and then the person passes away, then the death benefit is no longer $300,000, it's $150,000 that the loved ones get, right? So you've used $150,000 while you're alive, and then when you pass away, the $150,000 remaining goes to the loved ones, okay? If you take it out for other reasons, the only negative would be, like, other than long-term care, it's your cash value. The only negative would be that you can either take it all out and cancel the policy, or you can take it out as a loan and you would just have money that you owed to pay back into the cash value. And I could explain that more in detail on the side with somebody that wanted to understand that. I don't want to get too far in the weeds on that, but for long-term care purposes, as long as you qualify for the 2 activities of daily living, there's a 90-day waiting period, and then you can start drawing up to 2% of the policy without any, and that's what the policies, there's a rider and it's policies for, and you still have the remaining death benefit always, okay? Are you able to transition a current policy to this type of policy? That's a great question. So say you have another policy, you can. I'll give you a couple examples. So the lady that I did it for a couple weeks ago, she actually had a term policy, okay? And that term policy doesn't have any cash value, but I still process it as a term conversion. And so since she already had been underwritten with State Farm and she already had a term policy, when she did the term conversion, they didn't, as long as she didn't have anything in her interview that showed any red flags, they issued it very quickly and didn't require all kind of extra underwriting, okay? And, if you were to do a conversion of a term policy to a regular whole life without long-term care, it would automatically do it without underwriting. But since we added that long-term care rider, they do ask some more questions about cognitive ability and stuff, and she didn't have any negatives on that, and so it instant issued pretty quickly. So, say you have a universal life policy that you've had forever that has some cash value, or a whole life policy that has some cash value, you with another carrier or something, you can use that cash value and convert it, what's called a 1035 exchange, to exchange it to another type of life policy. You would just need to do some extra underwriting, okay? And asking about how do you convert a policy. If you have a life policy in force with another carrier, or with the same carrier that you want to do a long-term care policy with, depending on the type of policy, it would be what's called a modified conversion. And you just answer a few questions about your health. Have you had any surgeries or any kind of diagnoses since you wrote the term policy? Anything changed? And if there's no major changes, generally that it should go through pretty easily. Can you convert a policy? Okay, so say you have a policy with another carrier and you want to convert it to a long-term care policy. You can, but the only ones that would work in that case would be cash value policies, where you do a 1035 exchange. You take, say you had $30,000 in cash value on an old policy, you could take that $30,000 and move it over and to a new policy that would need to be, it would still need to be underwritten, but you could take that cash value, move it over without any tax implications to the new policy, okay, to help fund it.
Thank you so much. I know this has been kind of like rapid fire questions.
Yeah,
So
no.
I'm glad, honestly, I'm glad that we've recorded this so that I could watch it back, because it has been a lot of information in a short amount of time. So I appreciate you being quick on
Yes.
your toes. You didn't know that you were getting the rapid fire questions today.
Yeah,
I feel
I'm
like we're on
happy
a game
to.
show or
And
something.
yeah, if you have
Um,
any other questions, or if anyone from your team has any questions, I'm happy to answer anything else on the side. But I do think it's really important for everybody here on the call to at least take some time to think about how you're preparing for the potential need for long-term care, and to make sure you have a plan in place. Regardless of how much resources you have, you want to start preparing ahead and thinking ahead for that. And generally now, with a lot of these policies that are in the market that are still being offered, like with the one I was talking about, the US, what's called a universal life with a flexible care benefit rider and an accelerated death benefit, even if you don't need long-term care, the neat thing is it converts to cash value benefit to your loved ones after a death benefit, right? And so it used to be those old policies, if you didn't use it, you lost it. You paid all that money and you didn't get the benefit. Now, regardless of whether you use it for a living benefit or a death benefit, it's going to be a benefit.
Yeah, absolutely. And we do still have about 15 minutes for other questions. Should anybody have any? I know a lot of these questions my fingers are sweating. I've been typing so fast. I did have some questions about one of the things that you had mentioned, guaranteed issue final expense. That
Sure.
is not something I've ever heard of spoken about through an insurance carrier. I've only ever heard that spoken about through like a funeral director, provider. Can you talk about that a little bit more?
Sure. So, different carriers provide different kinds of things, and you could talk to whoever, on that. But with State Farm, we have a policy that we provide to our customers aged 45 to 80. And basically, there's no underwriting required. So you can get the policy regardless of how healthy you are. Like, I have somebody that, I wrote it on, well, somebody that I know that was like 400 pounds and would probably not have been qualified elsewhere, but she got it because she didn't need any underwriting or qualification. And the way that policy works is it's either a $10,000 or a $15,000 benefit, which would cover most funeral expenses or final expenses. And the protection State Farm has is if the person passes away within the first 2 years of the policy, due to something, something that was pre-existing or, a health issue, for example, they get all of the money they paid back and some interest, but they don't get the death benefit, okay? And if the person lives past 2 years, regardless of their health condition or anything, everything's covered. So that's the protection they offer. That protection is like if somebody's super sick and ill and they get this policy, they die within the first 2 years, they get all their money back that they paid into it with some interest, but they don't get the death benefit. So that's the protection that the company has.
Yeah, that's definitely good to know as you're, if you're in the market and if you're shopping around for all of these different, advanced planning, is to know what the caveats are, know what the fine print is, and to have a relationship with your insurance agent or whoever the planner is that you're speaking with so that they can, break it down for you into layman's terms, because I'm sure Stephen and any other insurance carrier, they talk the mumbo jumbo and the definitions that, all of those words that regular folk don't always know. So it's helpful to have a relationship with somebody to kind of break it down for in regular people speak.
And I think that's right, Brooke. Anytime you're unsure of something or confused, find somebody that you can ask. People generally want to help, and there's a lot of good people out there. Make sure it's somebody that's licensed and has the experience. But if you're unsure, like I said, you can go to that longtermcare.gov website that Brooke posted on the chat. Excuse me. But you can also talk to a professional, and those professionals can help provide any kind of advice or support if you need it.
Fantastic. Thank you so much. And somebody did ask, can you get the recording of this? Yes, it will be posted on our YouTube channel. I've posted a link to that in the chat, our YouTube channel. We post pretty much every educational presentation that we do on our YouTube channel, unless the presenter doesn't want us to for whatever reason. But and another great resource that I do want to mention while we're, all ears, is our resource library that we have here in our office. So not at all of our like Charlie's Place offices, but all of our main office here on North Boulevard. We have a really large resource library that I personally am in charge of managing. So if there is a particular type of a topic or something that you're interested in, that is quite literally my job to find it and then have it available for you. So a lot of the things that we've talked about today of advanced planning, of legacy planning, about estate planning, who are elder law attorneys in our area, who are experts in Social Security, who are people that I can talk to about long-term care insurance. I have lists of all of that. So or if I don't have a particular thing that you're looking for, I'm happy to find it for you. So knowing who to talk to, who is a unbiased, going to give you an honest feedback to better support you in your future and better situate yourself. Alzheimer's Services in our resource library, we're happy to be that for you. And unless anybody has any other questions, please feel free to post in the chat. But that pivots us very nicely into our next presentation, which is next Tuesday here at our office at 10 a.m. If you are not registered for that, please let me know that you're coming, because I will have the materials available for everybody in person. But our theme for next week is creating a caregiver binder. And as every caregiving journey is very different, everybody's caregiver binder is going to look very different. So I'm going to have a ton of different essential recommended paperwork that you gather and have together in one spot, so that when you go to the hospital with your loved one, or if you go out of town for the weekend and you have your cousin watching your loved one and you need them to have all of the emergency material, you have it all in one spot. And that is something that just like life insurance, you think about it, oh, I need to do that, oh, I need to get all of my loved one's medications list together and stuff like that. But oh, I'll do that, later. It's not a fun thing to do. It's not super exciting to do, but it is very necessary. And I imagine takes some stress off of your back once you know that you have it done. So this is next week is just a really great opportunity to set aside that hour of time to do that. Even if you don't fill it all out, then at least you have it and have no excuse not to fill it out from then on. So I hope y'all join us for that. I do see a question. Brooke, how do I contact you about getting on the list with my services in Dallas? Stephanie, if you want to email me or call me, I'll put my email here. And I'll put our office phone number here. Either myself or Ellen, who is our social worker here, and my boss, we are always happy to, just making sure I'm typing our phone number correct. We're always happy to answer any questions or provide any resources for you, however we can. But unless we have any other questions, I guess this completes our event today. Stephen, thank you so much for sharing the time with us and being on the spotlight for an hour to answer all of our questions. Some of y'all, if y'all are very familiar with Alzheimer's services and have been to our walks in the past, Stephen and his booth is always at our walks. So I appreciate you for being there and supporting us in our mission as well.
Well, I appreciate you, Brooke, and it was neat because I've known Brooke for a long time. She actually, I was a youth minister years and years ago, and she and her family, they lived in, they went to St. Isidore, but they also would come to St. Aloysius sometimes with us. So it was nice seeing Brooke and know her husband's family. Baton Rouge is a big city with a small feel, but it's a big city that has a small feel, and everybody's kind of connected one way or the other. So it's awesome to be here.
Yes, and you have a long memory because that was 15 plus years ago. And
Yep.
Fantastic. Well, thank you so much for sharing your expertise with us today. I'm gonna, if it's okay with you, I'll have your contact information in our follow-up email.
Sure.
And if anybody has any questions, please feel free to reach out to me. My contact information is in the chat, and I appreciate y'all for joining us today, and I hope to see y'all next week.
Thanks, Brooke.
All right. Thank y'all. Take care.
Great job. This is awesome. So glad y'all are providing this resource to the community.
Absolutely. Absolutely. Thank you. Take care.
Bye.